Hello people. Today I got another video for you and I like it because today we're going to talk about how to acquire capital. And the name of the game is not how much money you have. In velocity banking, it's how much money you have access to. And that's what we're going to be talking about in today's video, is how to acquire capital. If you starting with nothing, so let's say you're just getting out into the workforce and you don't have any credit cards, you don't have any car payments, nothing like that. How would you build your credit up in order to acquire more capital in the future? So I hope that you guys watched the video on how to build your credit score up. I had that in the previous video before this one. And what you want to look at first is you want to acquire a secured line of credit, because if you don't have any history, it's going to be very difficult for banks to trust you enough to give you personal lines of credit that are unsecured. And secure just means it's attached to some sort of asset. So for most people, the secured line of credit is going to be a credit card, and they're going to want a deposit of cash. Now, the first one I started off with was Capital One, and they have an amazing secured credit card program because after 2 years, they give you your money back and make it unsecured. So you still are able to build your credit score and get your money back eventually. So you want to do this first. And then what you want to do is you want to use it, and you want to make sure you have 6 months of on-time payments. And that's going to increase your credit score fairly quickly if you're new to the game, right? But let's say that you've already established credit before in the past, you're a mature credit user. So now we need to look at the strategies for velocity banking and how we can acquire capital and then leverage money, other people's money, instead of leveraging our time, because that's the name of the game, right? We don't have enough time. We only have 168 hours in the week. 40 of those we work, right? And we don't get paid until we work the 40 hours. So we need leverage in order to create velocity, right? So that's why we need a personal line of credit. Now, the way you would do this is you have to research banks that offer personal line of credits. Most banks offer some line of credit, but it might just be a HELOC, and HELOC stands for Home Equity Line of Credit. And again, if we're just building this up, most people don't have homes. So that's why you want to search for a bank with a personal line of credit, which is unsecured. And there's a couple banks that I found. I am from Connecticut, so one bank that I like is Key Bank. They have credit cards and they have personal lines of credit. My personal line of credit currently is with Santander, which is pretty good, but I don't know if they're going to keep their personal line of credit program going for too long, so I might switch to Key Bank. So once you identify the bank that you want to go with, you need to build a relationship with that bank. And building a relationship is not that difficult. It just simply means opening up a checking account with them and getting to know the bankers and the bank tellers there. Once you build a relationship with them and they see you over and over again, it'll be easier for them to give you this, right, as a product, right? The bank wants to give people money, but they want to give people money who they trust and who they have a relationship with. So once you identify your bank, let's say you want to go with Key Bank, you just walk in there, you talk to the banker, you have a couple of jokes, create some conversations, open up a bank account, and then you want to be in there on a consistent basis. Maybe you withdraw money on occasion, maybe you're making a deposit, and then eventually you want to go back to the banker and tell them, hey, I heard you offer PLOCs. Could you explain a little bit more about that, right? And that's how we would do it. Then if you feel like you're ready, your credit score is high enough, then you can apply for the PLOC. And I usually recommend credit scores of about 700 or more in order to guarantee the PLOC, right? So if you have a 650 credit score, you might be able to get a PLOC, especially if you have a great relationship with your banker. But to be on the safe side, I would prefer 700 or higher. And then once you have the PLOC, right, we're doing velocity banking. We're pulling money out, we're putting money in, we're improving our credit score, and we're improving our cash flow. Then that's when we go to the next step, which is building a credit card system, right? So the credit card points and sign up bonuses give us extra additional cash back on what we're spending, right? So this is all part of the system, right? So with our credit cards, we use this to pay our expenses. And then with the personal line of credit, we use this to pay off the credit card. And then with our income, we use that to pay off the personal line of credit, right? It is the leverage triangle, right? And I'm going to keep using that word leverage. So I hope this makes sense. It's all a system. We build it up. Step one, secured credit card. Once we improve our credit score, we get a PLOC and build a relationship with the bank, right? And once we do that, then we go up to credit card and acquiring points and sign up bonuses, which actually reduces our expenses because most credit cards offer anywhere between 2% cash back to 5%. And there are websites on how to optimize your cash back, right? So we're saving money, we're leveraging money, and we're doing velocity banking where we're paying off the debt as quickly as we can, right? So hopefully you guys can start to see how the system works. And I have a goal of acquiring 2 lines of credit per year. That's where you want to max out, because if you do more, then you're going to acquire more hard inquiries on your credit score, and that's going to affect your credit score. So 2 a year, maybe 1 cashback rewards credit card, and then maybe a balance transfer credit card that we do velocity banking with. So you want to have those 2 credit cards every year. And then eventually we want to move to creating our own bank so we don't have to rely on the banking system. And this is a concept I haven't talked about in my previous videos, but I want to bring up, and that's the infinite banking concept. And this is where we leverage life insurance policies, right? So once we start to 10x our income and we have enough cash flow and we don't have any debt, then we can start to put our money in this savings asset, as I like to call it. And then instead of having to borrow money from a bank, we can borrow money from our life insurance policy, the cash value amount in there, and begin to do velocity banking that way. So those are the 4 steps that we're looking forward to acquiring capital. We're starting from nothing, getting that secured credit card, getting the PLOC, credit card points and bonuses, plus just having the points from the credit card for our expenses to reduce that, and then eventually going to the infinite banking concept, which is the cash value life insurance policy, which would replace this somewhat, right? And that is the formula, the system that we're going to go with on our journey to becoming financially independent and retiring early. So I hope you guys enjoyed this video. There's a lot of concepts to understand, and I hope you guys enjoy, and I'll talk to you in the next video.